Hi, this is Matt from Speak Straight Mortgage. In this video, we're going to be going over CHFA qualifying income. And this matrix, which I'll provide the link to, lists CHFA programs, their income limits by county in the state of Colorado. If you're looking up qualifying income, it's likely that you're concerned about making too much money, and that's one reason why I'm making this video. It's not as straightforward as just seeing 162,960 and thinking, well, I make too much money, I can't use that. And I'm going to go over why. So, first of all, just going over the programs themselves, Smart Step and Preferred, that's the FHA and conventional, most popular CHFA programs. You can see one of the reasons why is because the income limit is the highest, and it's for the entire state. Well, in the vast majority of cases, it's the highest. Okay, but you can see that it says qualifying income, and I'm going to go over why that's important. First Step and First Generation are FHA programs. You can see they say gross annual income. Okay, so that the big thing I need to go over here is what is the difference between qualifying income and gross annual income? So qualifying income only means what income that is used to qualify the borrower. And I'll give you a real world scenario, or a few of them. Let's say you're concerned about making over this amount. Let's say a wife makes $150,000, husband makes $50,000, and they want to use this program. Assuming they can qualify with just the wife, they could still use this program. That's a simple way, a simple example. A little bit more complex example. Let's say that the husband makes $100,000, the wife makes $50,000, and that's in base pay, like base salary. But they get bonuses that makes them exceed this amount. You don't necessarily have to count the bonuses in the qualifying income. These are just some ways that basically qualifying income can be manipulated. Then there's nothing wrong with doing that. Assuming, as long as you're following all the rules of how income is calculated for qualification, there's a lot of different ways that you can manipulate the income, which is completely different than when these programs, First Step and First Generation, they're using gross annual income, and there's many different programs that use, basically this is a more conservative method of calculating income. There's several programs beyond CHFA that have this distinction between qualifying income and basically gross annual income for the household. In the gross annual income calculation type programs are far more conservative. They'll often use worst case, like if you potentially could be over in any way, including, so first off, you have to include a spouse even if they're not on the application. You have to include their income, and you have to include all of it. You can't just exclude bonuses, you can't exclude overtime. They're going to use the most, generally speaking, the most conservative method to make sure you're under it. So they're far more restrictive. Versus if a program says qualifying income, just because you're over that doesn't mean that you can't use it. So that's the important distinction I want to make, is that this is where it's important to work with somebody that knows what they're doing if you're concerned about being over the limit, and seeing if there's a way to qualify even if your gross income is above. So that's kind of what I wanted to go over, that anybody can go get this matrix, look it up, and think, well, my income is over or under this. The important thing to remember is that qualifying income is not actual income. and gross annual income calculations for first step in first generation are going to be far more conservative. So that's kind of a summary of the whole video. There are also other programs that have no income limit, and I'll include links to that in the video description.